I am Max Keiser. This is the Keiser Report. Excellent news for stock market bulls. Looks like the Mayans were a little off in their predictions. The world is ending soon, and nothing could be more bullish for stocks. Stacy.
Of course, if you look at the stock market over the past month, we've had some extraordinary days, especially for companies that declare bankruptcy, right? This is the new adding .com or blockchain to the end of your company name, and it sends your stock price soaring. In particular, we've seen like a lot of companies go up over 100% in a day once they declare bankruptcy. So conspiracy theorists claim Mayan calendar was wrong and world will end on June 21st.
That means that the central bank will inject at least another $100 trillion of fiat money, if not $300 or $400 trillion of fiat money. What could be more bullish for stocks and bonds? Wow, this is going to be an epic rally. Can hardly wait.
Well, that's just kind of a joke, but this next headline is not a joke, of course. And this is that we saw on Friday of last week that a bankruptcy judge, Mary Walrath, just approved Hertz request to issue new shares. Now, remember, Hertz is bankrupt, as we told you. They declared Chapter 11 bankruptcy, which means that shareholders will get nothing, but share prices rocketed by up to like 500, 600%. They keep on going up and down. Then the judge approved the plan when the creditors came and said, basically, they wrote in an application to the court, basically saying, there's some maniacs who are buying this bankrupt company, and we, the creditors, have the full rights in the court, in bankruptcy court. So if these people are willing to give us their money for free, then we should get that. And she approved it. So I wrote about this, again, to remind you, because this is something, a quote from Bastiat that we often say here on the Keiser Report, and that is when plunder becomes a way of life for a group of men in a society, over the course of time, they create for themselves a legal system that authorizes it and a moral code that glorifies it.
Right, this is something new, an initial bankruptcy offering, IBO. Never been done before. And the equity of Hertz is worth negative $2 billion. And the valuation in the stock market is a positive $400 million. And, you know, it's so interesting because usually in other areas of the economy, there are consumer protection laws in place. It's illegal to sell tainted meat. It's illegal to sell asbestos. It's illegal to sell toys with little parts that can get stuck in babies' throats and kill them. But on Wall Street, where there should be some consumer protection against selling stock in a bankrupt company, that doesn't exist. In this kind of mentality of, if we are the money printers, and in this case the stock printers, the counterfeit, this is counterfeit stock. They're going to issue $1 billion worth of counterfeit stock. It's all worthless, and they're doing so the same reason anyone would issue counterfeit money or counterfeit sell orders or any type of counterfeiting, to commit a fraud against people for ill-gotten gains. But in America, that's called the American dream.
Exactly. And I mean, it's still, at the time that we're recording this on Monday morning, we're not quite certain yet if the SEC or the exchange itself will allow this, because it should be fraudulent. But nevertheless, you see online people glorifying it. It's like, well, you know, this is capitalism. This is free market capitalism. If people want to throw away their money, that's fine. So they are glorifying it. And again, you know, we were joking at the top of the show that we're about to get hit by the end of the world on June 21st, and that might be seen as a good news. Well, the U.S. national debt in the past week passed $26 trillion. That's up $2 trillion in 2 months. We're about to hit another trillion this month. So if of course, the Mayan calendar isn't right and we don't even make it to the end of the month. But so let's look at how this has unfolded over the course of, you know, the stock market, because we have seen stock market hits all-time highs, and, you know, of course, it's fallen back and stuff and crashed a few times. But here's the S&P 500 versus corporate profits after tax. Going back to, these are the good old days when Max and I were kids, like profits mattered to a company's stock price, and that's what investors looked for. And then from the dot-com boom, when it was a new paradigm and earnings didn't matter anymore, you know, we took off, where the stock price was divorced from the earnings, obviously, because a lot of dot-com companies at that time didn't make any money. And then it went back to normal, where prices mattered, earnings mattered. And now we're in a new reality. People have just like decided since Trump got elected, essentially, that if you look at the divorce between stock prices and earnings and profits of a company, like nothing has mattered since Trump got elected.
Well, what's remarkable is that a lot of traders now of stocks are coming over from gaming, coming over from Fortnite, which is a multiplayer game, online game. They have their own internal currency. They have their own internal economics. They have their own digital assets, and some of them are scarce, and some of them are traded back and forth. And so a lot of people at Fortnite is apparently seeing a migration of users and players from Fortnite over to the stock market. So you have 10-year-olds, 11-year-olds, 12-year-olds day trading on stocks, and they see Hertz, and they see it's at $1, or they see it's at 40 cents, and they say, oh, that's cheap, and it's cheaper than the game piece I have on Fortnite that I paid maybe $50 for that, and I went to war with the wizards on Fortnite and I won myself a bag of energy. Why not take some of that and buy Hertz stock at 50 cents, because it might come out of bankruptcy if the grand wizard, Dr. Fango magician Carl Icahn, maybe he'll appear out of the smoke and turn my bankruptcy into something positive. What do you say, Batman 48792 user 9-5? Gee, I don't know, Columbo 872. Let's do it. Let's buy stock in this bankrupt company. And unfortunately, the perpetrators of this fraud and the counterfeiters of this stock are raking in billions.
Raking in billions, raking in trillions of US dollars, of course, because there are also other ways to look at the world in the real world, measured by honest money, like gold, for example. So stocks aren't pumping. The dollar is dumping. If you look at the S&P 500 in gold grams, it's actually not been doing so well in the past, well, since 2000, since the dot-com burst, when it did take a lot of gold, because that was at the bottom of a gold bear market for 20 years, right, since 1980. And here we have it's going down in gold gram prices. So if you measure all this trillions of dollars being printed, remember $1 trillion a month we're running at right now in a allegedly $20 trillion economy, which the Fed said, the Atlanta Fed says is down by 51% in the second quarter. So we don't know how to measure any of these numbers in a virtual world, even though it's all algorithmically traded. You would think that they would have an exact number to the decimal point.
Right, exactly. That's the promise, is that we don't need gold because you can run everything with our computers and spreadsheets and mathematical formulas and algorithmic trading. And now after that 25-year experimentation where gold was abandoned and fiat money was used as the unit of account all over the world in different styles and flavors of fiat money, it's become clear that the computers are out of control. The central bank has gone rogue, and Wall Street is happy to counterfeit billions of shares of worthless paper. And that is always, since the beginning of civilization, a recipe for the adoption of gold. And that's why gold is now moving higher against everything, including stocks. And it's also why smart people are accumulating gold, smart countries are accumulating gold. And we may never see inflation. We may go from the phantom deflation right to hyperinflation. So it's phantom deflation. There's no deflation. It's phantom deflation. And then dollar collapse.
Yeah, it could be a hyperinflationary event, which is a political thing. It's a switch. It's a sudden switch in the mindset and the faith in the currency, or the faith in the institutions, or faith in the government. And you saw that, I think we've pointed this out before, you could see that in Venezuela, you could see under Chavez, as most developing economies and oil-based economies, they had a high inflation rate. But as soon as he died, you could see the hyperinflation happen in their currencies.
Right. People, I think, should know that the stock market in Venezuela.
I was about to get to that.
Let's check it out.
So, like, it in fact did hyperinflate, and what you could see in hyperinflation is stock market boom. So when you celebrate these hyperbolic stock market moves in the U.S., despite a 50% decline in the economy, I want to point out to Venezuela, their stock market is doing better than the United States stock market. And Zimbabwe, also doing better than the U.S. stock market. So this is a hyperinflationary event, and that's what you're seeing.
Well, that is just truly amazing. So the takeaway then from this Hertz deal, where it's a $2 billion negative net worth company worth $400 million and they're issuing an initial bankruptcy offering fresh deal of stock. The takeaway, the news, the information, the fact has nothing to do with Hertz, the car rental company. What it says is that the dollar is collapsing. The dollar has entered a hyperinflationary collapse, and this causes people to run into things like fictitious stock markets, as we've seen in Zimbabwe, as we see in Venezuela. This is what's happening in the United States right now, as of today. The Mayans, they nailed it.
Well, there are many possible answers or explanations, possibly a variety of them. It could be hyperinflation. It could be people just thinking they're acting like the Fed. If Jay Powell runs the central bank, and the central banks run the banks, and this is how bankers operate. They transfer onto their own balance sheet bankrupt companies, and maybe that's what I should do. That could be trickle-down economics happening there, or the ivory tower economics. It could be people instinctively running for some sort of hard asset. We've seen that in places like, say, Somalia, is that, you know, when their currency collapsed or their government disappeared, their whole government disappeared, they were using old Somali dollars or notes, whatever their currency is called, from when they last had a central bank. They were only accepting those from like 20 years ago as legitimate currency. So, you know, we're in a paradigm shift. Something's happening. We can see that all around us with protests and irrational prices, negative interest rates, negative oil prices. Something's going on. And again, like we were making fun of the Mayans, but they could be right.
Right. Well, some websites that cover stocks and bonds, Hertz bankruptcy is relatively new, and they don't even have that updated information.
Yes.
So if you're a 10-year-old kid on Fortnite and you switch over from gaming to buying Hertz stock on your favorite discount, stock market app, you may not be aware of the fact that this is bankrupt. So just because you sell rat poison next to the kids cereals in the supermarket doesn't mean that rat poison is as good as a kid's cereal, Captain Crunch or Cheerios. They're not the same. One is something you eat for breakfast. One is cyanide. You kill rats with it. But here you put Hertz next to IBM or Microsoft. You're saying these two are the same thing. Well, in fact, as Warren Buffett might say, one is in fact rat poison. Hertz is a negative counterfeit scam that is somehow being allowed to be perpetrated by the authorities in the U.S., I guess because they're, what's the word? Corrupt. That's it.
Like I said, the Bastiat quote. But, what Max is talking about is if you go, I don't know why I said that like a New Yorker, talking about.
Why are you talking like that?
I don't know. Maybe it's the end of the world.
Queens?
Maybe it's Mayans. The Mayan gods are going to come and we all start speaking like a New Yorker. But what I was going to say is that if you go to Yahoo Finance or if you go to Google Finance or if you go to MarketWatch and you look for data about a stock like Hertz, or Schwab or any of these apps, Robinhood, what you'll find is that, it gives you all what the analysis is. How many analysts are saying this is a buy, how many a sell. So it hasn't caught up to the fact that it's declared bankruptcy. There's no big red warning sign saying, warning, this company has declared bankruptcy. It still has those old buy and sells. So with Hertz, the majority of analysts in the last quarter were saying it's a buy before pandemic hit. So.
Yeah, everything has become rat poison. Rachel Maddow, Warren Buffett, Hertz stock. That's the American diet, rat poison. All right, well, we're going to take a break. And when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to James Turk of goldmoney.com. Full disclosure, I am an investor in the company. James Turk, welcome back.
Thanks, Max. Good to see you. It's been a while.
Indeed. Well, we got to get your thoughts on something here. Bloomberg recently interviewed the Yale economist Stephen Roach, who said, quote, the era of the U.S. dollar's exorbitant privilege as the world's primary reserve currency is coming to an end. What do you think?
I think it's also long overdue. The system has become so abused that we're in its death throes. It's just a question of when it all falls apart. And that's, I think, what we're all watching and waiting to see how it unfolds in the weeks and months ahead.
Right. And to follow up on that, Jerome Powell, the Federal Reserve Chairman, promised 0% interest rates at least through the year 2022 and more money printing. We also see trust in institutions failing as the riots are suggesting. Are the ingredients of a hyperinflationary collapse coming into view, James?
Yeah, definitely, Max. You know, Ludwig von Mises said it, he called it a crack-up boom. And you had the impressions of the economy doing well because of the stock market rising and things of that nature. Actually, the economy gets destroyed along with the currency. And, you know, the stock market is going up for one simple reason. The Federal Reserve is printing so much money that it has to go somewhere. And one of the safest places to do it is to put it into tangible assets or near tangible assets, which of course are stocks that themselves own tangible assets. So what we are seeing, in my view, is the early stages of what, you know, this Ludwig von Mises crack-up boom. And this is going to play out over the next 3 to 6 months, which is an interesting point because once the hyperinflationary process starts, people lose confidence in the currency very quickly, and it tends to last about 6 months before the currency collapses.
Right. I think people would be surprised to know that the stock market in Venezuela is zooming higher, right? And that currency is collapsing, and for the exact same reasons that you're talking about. So here you have the NASDAQ hitting 10,000 and the stock market almost back up to all-time highs. But it's more a function of a hyperinflationary collapse and loss of confidence in the dollar than anything having to do with any of the companies that make up these indexes. The earnings reported by these companies adjusted for stock buybacks is actually down. So this is really a strange time. It is appearing to be a crack-up boom. You have companies like Hertz that declare bankruptcy, and then the Robinhood app traders zoom in there, jump in there, and bid the price up. Is this current generation of day traders that are using their relief money and the subsidy money they got from the government to trade on discount brokerages on penny stocks, is that kind of like a signal that we're hitting a market top, James?
Well, I think it's a signal of how crazy the money situation is. And there's just, you know, tons and tons of money looking for a safe home. And that's why you're seeing all of these crazy things happening. The way I sort of describe it, Max, is that it's like a spinning top. Before it falls over, you have these huge walls one way or the other. And so you're seeing this flow of money going back and forth, crazy things happening. But it all comes back to the monetary situation, which is really, you know, the problem that the authorities are not actually focusing on. They think that they can get themselves out of this problem because they've many times in the past, and it's that kind of thinking that leads to hyperinflation.
Right. Now, what's interesting is that Chairman of the Fed, Jay Powell, and before him, Janet Yellen, Ben Bernanke, you know, when they talk about their policies, they make it sound like they are doing something good for the economy and doing something good for the average working person. And they deny that they are causing inequality in the system. Jay Powell, once again, when asked, are your policies of helicopter money causing inequality? And he said, oh, no, not at all. What do you think?
Well, I think it's very simple, Max. They tell you what they want you to hear. They don't necessarily tell you the truth. You have to go out and look for yourself as to what the truth is. And the truth is that crude oil is back at $4 a barrel when 6 weeks ago you could give the stuff away. All of this is going to have hyperinflationary impact. And it's already starting, I believe.
Right. Now, James, I have to pick your brain on this because you are, of course, an entrepreneur and a historian and a great writer of so many great essays over the years. If the U.S. loses its exorbitant privilege, what does the post-Bretton Woods situation look like? Who will be seated at the table? What does the next international unit of account look like? What does that look like, James? Kind of like when they have to sit down and figure out ultimately how to solve this mess. What will that look like?
Well, you know, Max, I think what we can basically say is it's unpredictable. We do know one thing, and all we have to do is look back at monetary history, and we see that gold always comes as the central focus. It's done for thousands of years, and it's going to do it this time. The only question is, are governments going to go back to gold willingly, or are they going to be forced to do it because of the market itself? And it's a question we just don't have the answer to. depends on politicians and central banks as to how they act in the future, what steps they take in the future, as these continuing monetary problems continue to build and become worse.
Right. Well, that's interesting because you're suggesting that the policymakers are reactive and that they're not proactive and that they don't actually have policies. They simply stand back and see what happens and then react with sudden surges of what appears to be repeating and doubling down on the same failed policies. Now, Alan Greenspan, of course, reinterpreted the role of the Federal Reserve Bank and said that it's actually not in their remit to try to guide the market in any way. Their remit is to only react after crashes. Later on, after he retired and he passed the baton of this faulty thinking to his successor, Ben Bernanke, he recanted and said, you know what, looking back on my career, I was absolutely wrong. So if Greenspan admits he was wrong, why can't Jay Powell and these other central bankers admit that that's actually the wrong way to go about doing what you're supposed to be doing, James?
Yeah, it's a good point. But the captain of the ship, and they don't want the ship to go down during their watch. So they're going to do what other captains of the ship did before them, if it's the and the problem is who's going to be the last one on deck of the ship when it finally does go down. I think that's pretty good that it's going to be Jay Powell. But keep in mind, Max, there's one thing that's very important here, that what we call the U.S. dollar is really the Federal Reserve dollar. If you look at the paper currency, it says Federal Reserve note on the of it. The U.S. dollar in law is 11.3 something fine grains of gold. So what might happen is that the Federal Reserve is just enough. The currency and all the debts and everything denominated in Federal Reserve dollars, including the U.S. government's own debt, becomes essentially worthless. And then they build a new monetary system based on constitutional money, which is, of course, gold. So there's so many different possibilities and permutations as to how this can unfold in the future. We just have to watch and see and plan accordingly. But one thing is pretty certain in my mind, that gold is going to have a key role to play as this unfolds.
Right. James, the last time I talked with you, actually, it predates when the world started to implement negative interest rates. We have not had a chance to speak to you about negative interest rates at all. And this is a new thing in the history of economics. Government bonds suddenly were issued at negative rates. It seemed a repudiation of all laws of economics, but there you have it. It's still being done. How do you weigh in on negative interest rates, James?
It's just so absurd. Where do you begin to discuss an absurdity? It's just another indication of how out of whack this monetary system is. And the only reason why negative interest rates exist is that, the central banks are keeping interest rates low in the hope that they're going to be jumpstarting the economy. They've been since 2008 with the last collapse. It's just a question of, again, how much longer they can do it, and get all of the abnormal things that are occurring today. The dollar is weak again. Interest rates on long-term bonds are going up. The U.S. government's monthly borrowing is increasing dramatically while its monthly revenue is falling, worsening its own financial situation. I think we're very, very close. And by the end of this year, I think we're going to be surprised as to how this system is going to be unraveling quickly.
Right. I read the mainstream financial press, and they're all basically Keynesian, and they all believe in aggregate demand as the ultimate arbiter of whether or not the economy is doing well. And they don't seem to care whether that aggregate demand is driven by debt and increased indebtedness. And so the question is now, if in fact we're going into a situation where the U.S. is $25 trillion in debt, they've got budget deficits in the trillions, they've got combined debt of all unfunded liabilities of close to $90 trillion. How does this work out in terms of gold going forward? So Bank of America forecasts $3,000 gold by 2021. Some have suggested a new Bretton Woods agreement would require all the world's Forex markets to combine and somehow be backed by gold, which would imply a gold price of $10,000 or higher. Where do you weigh in on that?
Yeah, it's a really good question. And I don't see any deflation in dollar terms. I see, inflation in dollar terms, but I see deflation in gold terms. What that means is that the price of gold in dollars is going to go up, but goods and services that you use gold for to purchase are going to become very, very cheap in gold terms. So in terms of upside numbers, the sky's the limit. All you have to do is look at the price of gold in terms of Venezuelan bolivars, or during the Weimar Germany, Reichsmarks, or what happened in Zimbabwe, or any one of dozens and dozens of other countries where the currency eventually collapsed. The gold price goes up because it's been money for 5,000 years, and it's going to be money for the foreseeable future.
Right. James Turk of goldmoney.com. Thanks for being on the Keiser Report.
Thank you very much, Max.
All right, and that's going to do it for this edition of the Keiser Report. With me, Max Keiser, and Stacy Herbert. I want to thank our guest, James Turk, over there at goldmoney.com. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.